By the way, this is 3 weeks in a row. Behind the headlines, we're going to talk about what the Trump tariffs really mean for you as a real estate agent. Let's get started right now. All right, episode 240. Whoa. We are going to be breaking down the, it's the headlines. It's behind the headlines, if you really want to look through it. What the Trump tariffs really mean for you as a real estate agent. Maybe you care, maybe you don't. But today, Trump's tariffs were supposed to go into effect.
Well, they did.
For temporarily.
No, the biggest one did.
Against who?
There's a lot to talk about.
Yes.
Today was a weird day.
Yes. It was all over the place. But they didn't all go into effect.
Right. Well, some of them got.
Yes. They went into effect and then they got recalled.
Some of them got deported for 90 days. Some of them got halted for 90 days.
Yeah. Yes. This is your first time listening or watching.
I'm so sorry.
Yes. And go leave us a review on Spotify, 5-star review on there. Go to Apple Podcast if you listen on that one. Go subscribe to our YouTube channel, it's only RE Pod, and then go to our Facebook group, the only real estate group worth being a part of. And then last but not least, there's two last but not least. If you're looking for a property management company, Homeward DFW has got you covered. Just go to homewarddfw.com and then get a podcast just like this.
Especially if leases confuse you, just let somebody else take care
I
of
thought
it.
you said Lisa's.
I mean, look, there are probably some confusing leases out there.
There
definitely
are.
Yeah, they're just
I bet
bringing.
Lisa Kudrow is pretty confusing in real life. She
She's
played
crazy
Phoebe way
smart.
too well.
She's crazy smart.
She's got a lot of degrees or something, doesn't she?
Yeah, she's
Yeah.
crazy smart.
That's pretty cool.
All right, we got to keep it on topic today because when I asked ChatGPT about reviewing this podcast, it said it's very good and great. The only constructive criticism is that we rambled too much.
Oh.
So we've got to keep this from not going off the rails. And we'll try that today because we're talking about the Trump tariffs, and this could lead to a whole bunch of things and what this means for you as a real estate agent because the market is volatile, right? I know that I was talking to a lender today, and he was saying how, talking about rates and how last Friday, which would have been sometime in April, we're April 9th recording this, or whatever last Friday was, he said we had seen the lowest mortgage interest rates we had seen in the last 6 months.
Mm-hmm.
And he was trying to lock in a client on a refinance. That client did not answer their phone.
Mm.
And now that refinance is dead because this week, all that's been erased.
Yes.
All those, the low rates for that portion is gone.
Mm.
I mean, and this is part of kind of navigating these waters.
Yeah. So is that current last update 4.9? Mm-hmm.
Yeah.
So we're up quite a bit today. Obviously, today was a very interesting day in the equities markets and then the bond markets as well. Yesterday was really interesting as well, though. So, and then Monday was really interesting as well because you had the head fake.
Yep.
But even though we had a sell-off, bonds actually rallied and went up. Treasury yields, I should say, rallied and went up. So, yeah, if you didn't lock in on Friday, we pretty much erased all of the reduction in rates that we have given, that we had for the last 6 months. We've given that all back.
Which, when talking to some other lenders, typically when you kind of see this weird volatility in the market, especially in the financial sector, you see an improvement in interest rates. And now we're almost back into this high inflation. Remember, what was it, 2 years ago when all of a sudden inflation shot up through the roof. We were, the Russia-Ukraine war had started, and there was, all that chaotic noise that was happening. And you saw that that's when rates really jumped up. Mm-hmm. And we were trying to see, all right, when are they going to pull down? When are they going to pull back on this? And it didn't really happen. There was some moments in time where you got back into the low sixes, and then it shot back up. When I bought in July of last year, my interest rate was 8%.
Yeah.
And luckily I got the seller to give me concessions to buy it down to 6.5%. But I mean, that was, we were talking about back then, potentially seeing rates get into double digits.
Well, there's one thing that I think I don't like to make a lot of forecasts in these volatile economic times, but I think Jesse will back me on this. The one thing that I think I will stand behind is with all of the back and forth with these tariff negotiations, I think the one thing that I would put money on is Jerome Powell, being the conservative Fed chair that he is not going to cut rates until we have a lot more clarity on where we're going.
Nope.
So expect higher for longer.
We should bring Greenspan back.
Could you imagine being a buyer or seller in this market and the whiplash that all of this creates, right? Like for the time being, buyers have missed the low interest rates again, and sellers are sitting on the market with tons of inventory, hoping for lower rates to increase competition on their house, and now they're sitting around waiting for their buyer. It's like the whole thing, if you were in the market right now or needed to sell or were sitting on the sidelines, would feel like such a freaking jerk around all the time. It would just be super, super tough to deal with any level of confidence at all.
So today was an interesting day because in my more private conversations, and I'll even just say it here now publicly, I've been highly critical of Donald Trump's approach to the tariff rollout. For somebody who's a much more conservative leaning financial thinker, I have been nothing but critical around the execution of and I would say the lack of rhyme or reason around the strategy for a lot of reasons. And I won't start to ramble around how hard it is to onshore, especially manufacturing industries and all those types of things when you haven't done that in 6 decades or whatever it is, because I'm supposed to not go down rabbit holes anymore. But today was interesting because I do think that this sudden 90-day stop on everyone except China has done 2 things. One, it does bring countries to the table, which is incredibly important, but it does also isolate the entire world against a common enemy, unfortunately. Fortunately or unfortunately, however you want to look at that. Because if our largest trading partner is going to isolate us against them in a heads-up trade war, and the rest of the world and the global economy is going to come to the table, then we've actually isolated on the other side a common global enemy, which is in no way a good thing. I'd prefer to not do that, but it's better than being in a global trade war. Now we actually have one country who is holding out, but it's also the largest trading partner of almost every country in the world. So it's a very interesting dynamic that just changed for the next 90 days.
Well, and you've got to be super careful as an agent too, to make sure that you're using these types of conversations as a way to help people avoid making a bad mistake and not fear mongering, right? One of the agents that I've met through TikTok, who I'm Facebook friends with now, made a post the other day that was kind of around this idea that we need to be the calm people in it, but more than anything, understanding that what you just said, the Fed is going to move super slow on this. Anybody who's sitting around waiting for rates to drop, it may not be in their best interest to sit on the sideline. And you as an agent have to be able to convey that around all of this rate conversation. Because as much as all the rate stuff matters, I find that agents struggle with the conversation more than anything. Struggling how to convey this to clients and making sure that they understand that what's going on with, because as somebody who is way less versed in this with you guys, all I keep hearing is that tariffs are going to make interest rates go higher. Right? I hear that there's a potential inflationary issue that tariffs will make interest rates go up potentially. And if I kind of in this industry, I can't imagine what people who only do this stuff every 6 or 7 years are feeling like right now with this stuff.
I don't see any reason why high tariffs would make interest rates go down in the short term. Because, and to back up just briefly, they're basically the long and short of it. There are a couple of ways to generate revenue as a country. You can either sell access to your consumption, basically sell access to the American people and their consuming habits, which is what tariffs do, or you could tax them. You could do both, but you'll destroy your economy. And that's why the tariff thing is a bit of a gamble, because you have to onshore so many jobs that you outsourced so long ago, and you have to do that in a way that is not inflationary. Because in America, we're going to charge a heck of a lot more for the same labor and the same materials than we could overseas. And so you have to bring taxes down at some sort of similar rate as you're charging access to your people. It's a lot more complicated. That's the high level overview. But I'm not necessarily critical of the idea of tariffs. It's just kind of the execution plan. Through all of that, the Federal Reserve is charged with maintaining an interest rate that is conservative enough to protect the economy from hyperinflation while also being low enough that it incites borrowing and growth. I think they're going to err on the side of the former through all of this. I don't think there's any reason to cut rates the way that we did during COVID, because we're like, hey, during COVID, we've got to spur economic growth because a lot of people are going to get laid off. Let's figure out a way to make borrowing money cheap so they can go start new businesses in this new era, in this new economy.
I think
that's not happening.
Think that's what's going to happen, though. Like they're kind of hanging their hat on the fact that like this spring market is going to be great because we're going to have lower interest rates and buyer sentiment's going to be higher and people are going to be able to get. And I just don't think that's what's going to happen over the next 4 months.
No one except, well, I mean, Donald Trump did tweet at about 12:30. I was going to say no one predicted what would happen today until he did that. Yeah. And the exact opposite happened on Monday where we had that head fake. And so before that reason, I just don't see any reason that the Fed would actually cut their lending rate. And I don't see why treasuries would reduce significantly unless we start coming to the table with some real hard long-term tariff plans that are not going to get flip-flopped overnight. We agree with Canada, we agree with Europe, we agree with Mexico in pretty short order, and then China does become the outlier, and we deal with that on a one-on-one basis. But even that, I mean, 104% tariffs on China, it's going to cause a ruckus here as far as costs go in America. And so it's difficult to bring interest rates down when you're basically running inflation that high, because you make money cheaper, you'll just pump more inflation.
The main thing, though, I would say that, what we've seen on social media, and you're starting to see the posts go around, is like now everyone is becoming an expert on the economy and on tariffs and
staying away from those
foreign relations and everything else like that.
I'm going to seek to learn from others.
Right.
Yes.
And at the same time, we as real estate agents have a job of selling and helping people buy houses. That's how we get paid.
Yeah.
And we need to find solutions to the problems that are in the marketplace, right? In the Dallas-Fort Worth area, inventory is starting to stack. Homes aren't selling as quickly. Now, according to some other markets in other states, they seem to still be doing decently well. California's picked up. They were a little bit slower, but California's markets picked up some. And if you look at it from a buyer side, the buyers are hearing all of this news that doesn't sound great. And so they're already having negative sentiment about going out and purchasing. Things cost more, right? So these tariffs increase, and not just on China, but if any of the other ones start to go through, now we don't just have an increase, from Canada's lumber. We start to see, inventory sitting at the end of March here, less in Dallas-Fort Worth at 4.6 months, and that's climbing.
Right, but days on market have dropped in that same period of time. It's a very interesting inverse relationship.
It's a lagging indicator, though.
I think here's what you're going to look at. Let's look at.
So you'll see that start to climb.
Boom. There it is right there.
So new listings have shot up because look, the spring market.
Yeah.
So you start seeing inventory starting to stack. It's taking longer to sell. Now, you start to see, all right, the new construction in the future may cost more because there's going to be they're trying to price in to offset future lumber costs. They're going to try to offset future appliance costs because a lot of these appliances are made overseas. Now, you as a buyer's agent or you as a listing agent, your job is to overcome these obstacles. This is why you get paid, to solve problems.
And you have to understand that they're not broke. There's like a huge group of people who are almost ready to buy, right? They're sitting on the sidelines because they don't want to buy at the top of the market. They're waiting for rates to go down. To Brian's point, they're getting tossed around in the washing machine with inflation and tariff conversations and the target moving every 2 months. So you've got a bunch of people, or I'd be a large group of people who'd enter into the space if they had any confidence in the fact that they thought they were making a good decision for themselves right now. And I think those are the types of problems you have to be able to overcome for people and help them clear the mess out, because those are scary things. And people are going to default to just sitting on their hands if they can't get answers to that stuff.
If you were to take actionable items just from this show and in general to think of this in a logical, as more as a marketer way of doing things. So Brian, you can go down a deep rabbit hole in understanding, the impacts, pros and cons of these tariffs that are starting to happen, how to use this in negotiation. Temporarily, it hurts the United States, hurts the average American, but in the long run, we should be better off. It hurts, our stock market. We've erased a whole bunch of wealth and gains, but we can't get stuck in that mess as business owners and as real estate professionals. We can do what the builders do at a high level. When they knew interest rates are going up, there was a massive home builder that, was it like $1 billion? $1 billion that they prepaid to buy rates down at super low levels. Smart. And they're starting to come towards the end of those rate locks that they had, pre-purchased and set aside. And that has been driving that company's growth. And why, as real estate agents, have we not done something similar to educate our pre-owned, clients to do something the same way? A lot of our agents are still overpricing houses. Mm. We're not educating our sellers on how to best win in this marketplace, on how to attract the right buyers in. And it's going to be done by offering low rates, some type of incentives.
I think there's a lot of buyers out there with questions, and they're not asking real estate agents. They're going to Reddit threads. They're going to TikTok. They're asking completely unqualified people to answer those questions, probably for two reasons. One, we all got our asses kicked in August with the DOJ ruling from a what would you say, like a public standpoint. They believe real estate agents are the worst.
Yeah, the optics weren't great.
Yeah, and I think real estate agents have backed this up by being kind of half of them not having any way to answer these questions. So they've gone somewhere else and are asking these questions of other people. So there's a couple of options. One, obviously clear up your hula hoop first. Make sure the people in your world understand how you're going to approach these things and what like my clients know I'm going to advise them conservatively on their home purchase. Yep. It is part of our bio consultation. I'm not going to take you out to the edge of the cliff and tell you to stand there by yourself. You may end up doing some things that are risky, but we're going to do it with some thought. Agents aren't able to solve those problems for people. They're not able to, and then those people are going and talking to silly people on TikTok, or they're going to Reddit threads, or they're reading the headlines, and they're completely opting out of the market, or at the very least seeing it in a super negative space. And now you've got to rein them all the way back in just to find out whether it is the right time for them or not.
Jesse, pull up our talking points here real quick. Brian, if we were to go down all of this talking points, and I'm actually going to throw this out to the side for a moment.
Fair enough. So
we can go down a different path. These talking points right here would bore the crap out of a buyer or a seller.
Absolutely.
For 9 times out of 10, if you went on a listing appointment and said, let me tell you about how tariffs don't just increase the cost of lumber, but they're going to do this, this, and this. You're not walking out of there with a signed listing agreement.
I'll just to pull your attention to bullet point number 5. I think ChatGPT is more in my corner than you think it is.
Oh, I believe it is as well.
No, what agents need to do differently right now, they need to become macro to micro translator. They can explain it, but you're not doing that to win it over.
Yeah. No, you're right. That's why I focus so much on understanding what's going on, because if you can't explain it to people, then what you say doesn't hold weight as far as advising.
Correct. And if you don't know what's going on and don't know how to articulate it in the right manner, you're not going to be able to overcome the mental obstacles they built in their head.
Right.
Based on what the media is putting out there.
I honestly think it is more important that real estate agents of all people are educated on global economics now than ever before. Because truly, I mean, if you think about it, I don't even want to ask Nick. I'll just tell you the amount of unrealized losses I have in the last 3 months has been ungodly. But everyone with a 401k is experiencing that. Mm-hmm. So this would be the one time probably in modern history where everyone is interested on some level in what's happening. You don't got to get super granular with it, but if you want people to trust you with their largest asset, understand they've probably lost 20% of their other nest egg. So being able to talk about the what and why and what may or may not happen is much more valuable than ever, because they're trusting you with their only other asset.
So do you open up? You open up. How much did you lose, bro? Me too.
Well, here's the thing: is and the reason why that's important is that clients are already hearing about it, right? They're already just like we said, they're already forming their own opinions. It's not like this isn't the day where you could be like, oh, well, maybe they don't know what's going on, and I'll go in there and be able to explain. They already think the car is driving off the road. Yeah. Right. And so your ability to go in and explain some of this stuff like to your point, it's going to make you a trusted advisor.
It's going to make you a trusted advisor, because what I will pivot to is my advice to you is always going to be the same. There's never going to be a market in which my advice to you is not to buy if it's the right time for you in your life, or sell if it's the right time for you in your life. Yeah. Right. Even though what I just said before about the losses that we've all taken over the last few months, I've been buying the entire time. Because I'm long-term. Yeah. I view my portfolio as long-term, the same way that you should view home ownership. So it falls flat, the advice of, hey, stop worrying about volatility. If it's right for you in this chapter of your life, buy a home, because there are always pros and cons. When there are pros on one side, there are cons on the other, right? When rates are super low, asset prices are going to be super high. When rates are higher and inventory is a little sketch, you're probably going to be able to negotiate a buy down. There's always a benefit, right? But if I just tell you, hey, buy a house if it's right for you, but I can't understand, or I can't explain to you how that fits into the parameters of your current fears about the world, you're not going to listen to that advice from me.
You mean that my logo and my CRM aren't the reason why people work with me?
Like, my advice is always going to be buy now if it makes sense for you, sell now if it makes sense for you. But I've got to be able to explain to you in the context of everything that's happening in the world why my advice is still buy if it makes sense, sell if it makes sense. Well, don't try to time the market, but I got to be able to talk about the market to tell you not to time it.
Because it's not 2021 anymore. You're not going to win in this market by getting your offer in the fastest with like the highest number. The only thing that's going to win in this market is insight into whatever's happening, right? Like pricing doesn't make sense right now. The comps tell you to price higher than what these homes are actually selling for right now. If you're pricing solely based off the comps, you are probably missing the mark. In almost in every case in DFW, you're missing it high right now. And you have to be able to explain to a seller why every single public metric they see for their house is probably not what that house is worth if they were selling today. And that is a nuanced conversation.
That's actually a really good point.
I was going to say, I mean, really, if you look at it, you probably should be pricing it anywhere from 3 to 4% below where the market says.
Absolutely
and
agree.
That's even it's probably lower than that.
Absolutely.
If you're not 5% below the market, then you're going to be sitting for
in high inventory neighborhoods. You're seeing it. If there's 10 houses on the market, 3 are going under contract.
At least a month.
Yep.
I want to pivot back to this builder conversation for a second, because I made a claim just a few shows ago around how all new construction is on sale right now. And I stand behind that, but I do think the tariffs are an interesting thing here, because I don't know how builders will react. Does it become this thing where it's like, we believe tariffs are here to stay, so you better buy now because prices are going to have to go up because we're going to pass that cost on to you? Or do they go into full-on fire sale mode because they can't afford to build more and they've got to get their inventory off their books?
I think behind the scenes, they go into every week builders are analyzing their weekly and monthly sales, and they're then determining price drops or price increases.
Builders might be the best people to handle and weather some of this stuff because they're so dialed in with how they move around prices and incentives and this spec house and get it cleared out.
Here's what I'll tell you.
Well, so many are public too, so your messaging affects it a lot. Like you can raise money with the right message.
They manage their risk a lot better on the big end than I think the individual agent or team or even brokerage does.
So they have teams of analysts that sit there and just talk about what.
So I took a client out a couple weeks ago and looking at new construction, and this client found one he liked. We went to had to make an appointment. The sales rep only had one time available. The rest was booked up. And I was like, all right, this is kind of for show. Show up. And unless they brought in paid actors and actresses, that model home was jammed packed.
I believe it.
Yeah, same.
Then we go look at the house. That sales rep was so busy that they gave me the key to go show the house. You know, normally the sales reps, when they have time, they'll go walk it with you. Client liked the house. They made him, before he could make an offer, he would have to go to their lender before they would even consider an offer from him, which he did that night. By the time he was approved the next day, that house was already gone. So these houses are moving really, really quick. And the incentive is, if you buy now or offer now on these are spec homes ready to go. They're move-in ready in the next 30 days. It's a 4.99% rate and $10,000 in closing costs.
So I guess that's an indication, because my head is just going to why, right? Like why is a certain sector of the market moving slowly, and new construction, they have packed models. So you believe that's an indication that the buying public is generally rate sensitive?
I think that they don't know enough, but they hear the low rates, right? So they're not educated enough on, and neither are agents, to break down, all right, this 4.99, you're buying out in a much further area than even maybe you could buy here, you know, closer to your job, but you're getting something brand new. So you're getting that new paint, that new carpet smell. You're getting those
building out that infrastructure up north, dude. They got HEBs, they got everything, right?
You know, the
roads can't even handle the businesses they're building on them yet.
Yeah, they're offering closing costs.
Yep.
And then you go to your pre-owned client, your seller, who's been on the market, who's not willing to even offer any incentives. They've been on the market 130 days.
It's not new anymore.
It's not new.
We have a lot of construction here in DFW, though, that some of these developments started in 2016, and they've just been building and building and building. So you can be in the same development with a house and be long enough for your warranty to have almost expired. And then given those two things, it's a no-brainer.
100%. And then, again, I'm going to go back to the problem that we as agents have in this profession and industry is that, one, I don't know if we are afraid to say it. We're not educated enough. We don't think we're educated enough, but we don't sit down with our pre-owned seller clients to have this type of logical conversation and saying, look, John Doe buyer over here is looking at all this. They're not just looking for your house only. And if that doesn't work, they're staying put. They're looking at everything on the market, and they're looking at condition. They're looking at price. They're looking at location. They're looking at the aesthetics. And if they can go get a 4.99% low rate, $10,000 in closing costs right up the front. They're not even having to negotiate. It's the CarMax style model where there's no negotiation. So they're not having to go back and forth. They already know what's out there. Versus this seller here, and by the way, it's brand new. So theoretically, there shouldn't be any problems with it. We've got the unknowns of, if once we make a deal on the pre-owned house, what kind of condition is this in? What is the seller hiding? Not telling us. And now we're coming in and saying, all right, they're not willing to give closing costs. They're not willing to buy the rate down. So why would I go to this pre-owned house? And as agents, we need to paint that picture to that seller when you're competing in a neighborhood that may have 30, 40 other homes.
So then how does the pendulum swing if tariffs do stay higher for longer? If lumber prices in America increase by 25%, how does that affect the attractiveness of future new construction as opposed to all the valid points you just made?
This is the problem for the builders, because it's not only that they have to future forecast buyer sentiment. Like, you guys do commercial stuff. Are land development deals just really easy to keep together right now? Like, it seems like that like builders have builders have a lot of problems when it comes to forecasting this stuff out to the future, which I think is the reason why the best thing they're selling right now is these interest rates. You asked, why are these people backed up out of the door? It is absolute. 100%. I've done 40% of my deals this year have been new construction. And the reason all of those new construction deals have been won is because of exactly what Nick's talking about. It was the best available option, and it had an interest rate that none of my preferred lenders could touch.
Well, yeah, people are rate sensitive, obviously.
We'll go back to this, Brian. Not to interrupt, but let's look at this as a whole. Builders, the big ones, own the mortgage company. They own the title company.
They can turn the dial on that inventory too.
They're now looking at this profit hole. It's a profit-making center all the way around. And so will tariffs increase the cost of construction? Sure. Are they going to pass that on? More than likely. Do they have some wiggle room? Probably, to get things off their books. If something's sitting, guess what? They make deals. Yep. And so what if they push it up by $5,000, for each house? What if they push it up by 10, $10,000?
What if they just limit lot releases? Well, you know what I mean? Like there's ways for them to control their own inventory in some of these areas, in DFW specifically, right?
How many of these builders are pre-buying stuff right now?
Yeah, that's a really good question,
taking inventory.
right?
On it.
And so these are like, I don't have any answers. These are questions, right? Because to go back to my question from earlier, is like, do you see new construction increasing in price because they pass on cost of building to the consumer? And like, at what clip could they do that? And could they still protect the velocity of their sales by trying to keep their interest rates low and still incentivizing with rates because people are rate sensitive? But you make a really good point about pre-buying materials and things like that. Like, there's so many other costs that builders have, carrying costs, and then there's obviously like storage costs, things like that. You go and buy, let's just say, an entire master plan community's worth of materials right now. You know how much money that's going to cost to store somewhere, to keep somewhere? Your churn on that's you're gonna have theft, you're gonna have breakage, you're gonna a million different things, right? So like, nothing is free. There's going to be a hidden cost associated with everything. And so like, I'm just trying to synthesize, because I think it's important for agents to be able to have some sort of response to this, is like the simple question: do you think new construction will get more expensive? Should I be looking at pre-owned? I have no idea. I'm just trying to understand like all the different dynamics.
I think that
this is why, by the way, don't act like an expert online about anything. Yeah. I have a lot of information. I think deeply about things, but I don't think I ever put anything out there that makes me seem so sure about stuff. So you shouldn't either.
Wait, first off, you should listen to me because I'm a social media influencer. I've earned $14 off of my Facebook post. So anything that I say, take it with like I've earned $14 off.
I had somebody tell me this a long time ago. You like, as an agent, and I always told Nick this, especially, he used to have a piece of leverage where somebody who would negotiate for the clients. And I actually think like agents are made better by negotiating in the cracks, right? Like, we don't actually like the price and those things. We can do some stuff there, right? But the market will only like, where you can really save your clients money, time, headache, is being able to keep deals together through repair negotiations, with builders negotiating upgrades if they have that opportunity, negotiating things that are going to cost them thousands of dollars that they're not financing. Right? Because people can come up with a down payment and their monthly payment, but the extra $5,000 now for a washer and dryer and a refrigerator, right? To put blinds on a house, to put gutters on a house. Like, that's really where to get a Federal Pacific panel box moved out of a closet on the exterior of the home, right? Like, that's where agents are really going to be able, we go back to like, talking about how agents win in this market and stay informing their clients. Like, that's the space where they're going to be able to make huge headway for people. It is hard to tell those stories before you get into somebody's world. I understand that's difficult, but like, I think that's also why telling your story on social media, telling successes, showing people how you can win those types of things for them, that's going to be huge for agents being able to pick up new construction clients, or take people who maybe new construction's right for them in an area where there's a mix of both, and show them what's better for them. To answer Brian's question, how they get from pre-owned to new construction and what may work better. It's going to be an individual house thing.
But I think that needs to be done, like I said, social media wise. You tell the story and communicate it. I believe that your newsletter should come back. I mean, Matt and I were talking about this on an operations call, that we used to run a email newsletter, and it was more of a video one. Did really well. We cut it from a cost perspective. We found another tool that we're able to bring it back, and I mean, that's averaging anywhere from a 12 to 15% open rate, which is not terrible. The goal is to get it in the 25 to 30% range, but you're able to tell your story in that, because right now you're not, like you said, there's so much chaos and noise in the media right now. And as agents, we have to be in front of our potential future clients, telling them the story of, if you're here to sell a pre-owned house, how are you going to do it? Do you start seeing if after 90 days and we start seeing more and more of these tariffs come in, or if the China tariffs do stay, you start to talk about, you put it in your marketing message, no tariff, pre-owned, no tariff pre-owned property. The best marketer is what wins to attract the most amount of buyers and sellers. You're going to have conversation with your sellers and understand interest rate buydowns and give concessions, so that the consumer does not, the buyer who has really is more in control from the power side, because you want them to come buy your house, give them some freaking credits. Yep. Give them some concessions so that limits their out of pocket, or they buy their rate down, or you do both. Why would we want to be hung up on this? We had a seller who signed and hired one of our agents on a Thursday. On Saturday, he wanted to terminate because instead of making, $20,000 with hiring us, he wants to make $30,000, and he's going to go for sale by owner.
Okay.
And if you go look at the inventory, you go look at the market. Number one, it's going to take him a lot longer to sell his house. Number two, that obviously you're not running the right marketing message behind it, unless this person's a massive marketer to attract buyers and agents into their property. And so we've got to start having and educating, our clients at the highest level of what needs to be done to win in this marketplace. The 2008 crash was we saw inventory go through the roof. A lot of homes for sale, desperate and motivated sellers, a lot of foreclosures coming on the market back then, and the buyer pool wasn't there. Right? The government had to make first-time homebuyer incentives to re-spark that and reignite it. Interest rates were going down. Unemployment was super high.
I think what you're saying is that it's incredibly important to have a voice as a marketer.
Sure, a voice.
And your voice
Yes.
you have to have something to say.
Yes.
It's again, I almost feel like my entire career on this podcast has almost been building to like this particular moment in time where it actually behooves real estate agents to have a heck of a lot more knowledge about, world ongoings than they ever have in the past. And the reason is you don't have to have hard opinions, but it is important to be able to be educated, because at the end of the day, all we're ever really trying to do is answer the question, is now the right time to buy or sell? Like, is there really any more important question that we're trying to answer for prospects and leads and potentially clients?
How many years have we been asking that question about?
Every year for our entire careers. And how many years have we been asked that question?
Yeah.
Right? What's the number one question you get when people find out you're in real estate? How's the market? It's just all people talk about. And if you don't understand the things that affect the market or could potentially affect the market, then you're not going to have strong enough conversations and your voice is going to be silenced. You need to have a voice in this market to attract people that will know, like, and trust you. And when I say have a voice, I don't necessarily mean hard opinions. I don't know what's going to happen in the future. I do know enough to know if certain things happen, it will affect other things. So for example, new construction. Let's say the reality does come true that tariffs increase new construction prices. They bank on the fact that people are rate sensitive, so they increase prices to offset their material costs. They try to keep rates as low as possible in this environment and attract people with their 499, but now the house that was 375 is now 415 to offset the difference in material cost, right? If that makes new construction less attractive, well, the reality is we're also seeing the highest level of bankruptcy filings since when? 2008, 2009?
Yeah, I think so.
Okay, so that means that a lot of the resale inventory coming on the market right now is what you would call relatively distressed inventory, in the sense that a lot of people whose wages have not increased over the years spent a lot of money on a home during the last 5 years. Their taxes, insurance, and daily cost of living has increased. Their wage is not kept up with that. They are now looking to sell and cash in on the enormous amount of equity that they have captured since COVID. And they know there's only a small window for them to be able to capture that if the market really stays stagnant. And so, in that scenario, where would the best deals be as a buyer? I would be looking at purchasing one of the many pre-owned homes that are on the market, knowing that there's the highest rate of bankruptcy filings in the last 20 years happening right now. And that might be the opportunity. But if I don't understand these things, I don't really know how to have educated conversations with my clients that lead to, again, at the end of the day, buy when it's right for you to buy. I can find you an opportunity, but I got to be able to articulate that.
I want you to jump in on this, Matt. And then Brian, how many times did you see an agent post on social media during the COVID market that buyers should be sitting on the sideline and now's not a good time to buy?
I think agents bring their own opinion into other people's home purchases way too damn much in every market.
Yep. And what Brian just said, and what you like, even Matt keeps playing, he'll downplay what his knowledge on
That's
this.
a hell of a lot smarter than me.
Yeah. That's Matt's MO, right? He's actually doing that. He wants you to think he's the dumbest guy in the room, and he's playing every single one of us. He's like, yeah, no, tell me. And then he just absorbs it more, and he's like, that guy's a freaking idiot. But Matt, how do you make sure, as you're talking to your clients, because I know the answer to this, but to keep your opinions out of whether now is a good time to buy or sell?
I don't talk very much. I ask a lot of questions. I wouldn't say my buyer consults are traditional, but I definitely understand exactly what my clients' needs are, even from an emotional standpoint when we leave those things, right? I have probably about 8 buyers. I'm super buyer heavy right now. I have about 8 buyers pre-qualified right now. And I'm not even really selling the inventory right now because the inventory isn't that special. I'm focused on what their ultimate goals are, right? Like the area they want to be in, what they're trying to achieve. Is this the right area that's going to take them to their needs down the road, right? Like that's how I'm navigating the majority of this. And then just through having the type of partners who I can trust to, like, one of the best things that I've had in my business for years is the right people to help me nurture these people down the road too. Because like sometimes people aren't ready to buy, but they might be later, right? Like I don't lose a lot of opportunity because they just go to some lender and then the lender's like, oh, forget it, right? Like we can't do anything with them. So I spend a lot of time making sure that I have it really dialed in. And then I take the old Keller Williams Chapter 8 Ignite stuff, right? Like the old buyer consultation of how to bringing them back to their center when they're getting far afield and being like, hey, you told me this was really important. We're not focusing on this anymore. Did something change, right? Like my stuff spent a lot of really basic question asking without leading them, right? Just asking them what they're looking for and then letting them answer and then honoring that throughout the process. Yeah. And not being afraid to have conversations that might be a little candid with them when they get off course.
Matt always does a very good job of meeting people where they're at.
Well, he drives to them.
It's probably
part of the service I offer.
His biggest superpower is he can emotionally meet people where they're at. And I think that you can set the table for that by positioning yourself as a market expert so that when you talk, you're coming from a place of authority and you, through powerful questions, are able to meet people where they're at. For example, what I was just saying about new construction versus, inventory, and there's always opportunity, right? That right there is a bomb or YouTube video that goes to your entire sphere, right? Like, this is why I'm talking about it. Makes so much sense to have an education on what's happening economically right now, because your people want to know this stuff more than ever. And what they really want to know, Jim Cramer has a sign off on his show Mad Money, which, by the way, it suggests that you start taking Jim Cramer's investing advice. Right. Yeah. But there is one thing that he is right about, and that is that there is always a bull market somewhere. That's the sign off of Mad Money. There's always opportunity in the market, is what he's saying, right? And there's always opportunity in the housing market. When you can articulate that, if this, then that, then you're always going to have people in your corner because you are a trusted expert. He's down what? He's down a lot. It's not great. His charitable trust would be way better off just investing in an index. But regardless, that's a very true line that he says. Anyway, that's why I say, like, actions that agents can take right now, get educated on this stuff, because this becomes your voice. This becomes the content that you put out to your sphere, online, to your audience, and you position yourself as a trusted expert.
Do you, and we're not like this, we try to be this, but we're definitely not, but polarizing headlines and information attracts in, right? It doesn't have to
any one of them right now.
And it doesn't have to, by the way, it doesn't have to repel them away. It doesn't have to be like shock jock. Yeah. But if you take what Brian just shared about the weekly bankruptcy filings, and then you just go, and if you don't understand it, I was on a call, it's a little side note, little rabbit trail for me. I was on a call with my financial advisor yesterday. He was telling me about some investment deals. I told him to send it over to me because I only really invest in real estate, just now started to have this advisor. So he sends me what he suggests to invest in. And I said, I throw it through ChatGPT because I like to understand what I would be putting my money into. If I would have invested money in this fund or whatever he wanted me to do over the past 5 years, it would only earn me 3.7% return.
It's not great.
And I don't think he's got, these advisors, I don't think are prepared for people to run it through AI, because I was like, bro, I can get a better return on this. So you guys, if you don't understand this, go throw even this chart here, the screenshot that was sent to us about bankruptcy filings. I just put it in ChatGPT. Here's what it said. right? Key observations: 2008 to 2010, there was a spike, massive rise in filings during the Great Recession, topped out to be about 9 to 10 bankruptcies per week. And it was just pulling the chart, so it was obviously higher than that. 2019 to 2020, there was a notable increase. 23 to 25, consistent rising bankruptcy filing increase. The most highest in 2025. We're at the highest since 2010. The red flags on this: there's a potential wave of distressed inventory may be coming. Right. So if you want to prepare, these are the conversations you have to let people know, because you probably in your database have a group of people that are investors that have money on the sidelines or just in a money market account that want to go invest in real estate. So you can start being this educational mouthpiece for it, put it on social media. And then at the same time, you can have that message for your regular clients, your buyers and sellers, saying, we still haven't seen that yet. So if you're looking at buying your own home to get into that and getting out of renting, we have ways to get you into low interest rates. Or for a seller, if you're a seller, let's go ahead and get your home on the market before before this potential wave comes, and then it could drive your prices down.
Okay, let's do this in real time. Let's make this actionable.
I just did.
Because I want to say something, but while I'm doing that, put in there, because you just asked it that, right? Put in there a prompt that's like, if tariffs make new construction more expensive, how much better will the buying opportunity for pre-owned inventory in the housing market be, considering the amount of bankruptcy filings we're seeing that are the highest since 2010? Give it context of the entire conversation we're having right now.
Why he looks that up. One of the things that I think is really, you guys both just touched on, is that from an agent perspective, your knowledge around this is going to convert at every single level, right? You're going to convert scared buyers. You're going to convert stubborn for sale by owners. You're going to win over investors. If you're looking to coach or mentor agents are going to flock to you because of what you know. There's no part of your business that this doesn't affect positively by understanding what's going on.
Yeah. So you can become an AI, not AI replaced, AI enhanced. And so here's what it says. This is a massive opportunity for you to educate your clients and dominate the market by connecting the dots others aren't. Here's how to break it down for your clients or for your content. Tariffs versus bankruptcies equal the perfect storm for pre-owned homes. Number one, tariffs are making new construction more expensive. The cost of materials, appliances, steel, plumbing are rising across the board. Builders are cutting incentives, increasing prices, and delaying projects. Results, new builds are going to be getting out of reach for many buyers. With bankruptcy filing surging, the latest data shows 2025 bankruptcies are at the highest level we've seen since 2010. This is likely going to lead to more distressed homeowners needing to sell quickly. An increase in motivated seller listings and greater inventory of pre-owned homes, potentially at a discount, are willing to make a deal. Why pre-owned home is a smarter play right now, and then it gives a graph. Strategic messaging for your clients. With new homes getting more expensive and more homeowners under financial pressure, there's a window of opportunity to buy quality pre-owned homes at a discount. The smart money is going where the value is. And right now, that's not new construction. And then you go to tourstudio.com, build this out and have this, and then you send it out and email it out with your weekly newsletter. And it's built out all right there. You can even prompt it to put in your social media.
That was like a 5-minute video for your database, right?
If we know that 70% of agents didn't do a transaction last year, even if that number is high, let's take it back to the year before. Let's go back to the 49%. Knowing this stuff is going to make you incredibly dangerous to agents who are outdated and agents who are using last year's conversations. Right. You're going to outpace 50% of your competition just by understanding this stuff, because they're not going to understand it. They're not going to buy. How many agents do we say, just shut up and go to work? There are a lot of agents who, just like the commission thing last year, have buried their head in the sand around this and are just going to choose to ride whatever wave ends up showing up at their front door, and it will wash some of them out to sea. Yeah. Right. And so understanding this stuff is going to make you incredibly powerful when you're around those types of agents or competing against them too.
It's just such a silly thing to say. The thing we see online, shut up and go sell a house.
It's you're on social media typing this back to me.
If you were a stockbroker and then something happened that affected the market and people were like, shut up, go sell a stock. It's well, this is relevant information.
It's part of the
I might need to be
I thought you guys said you wanted real estate agents to do more.
Yeah, and to know more, right?
Yeah, exactly.
I have this, think about this, when you're talking about your financial advisor basically being replaced by AI. They have this, Jesse will like this. I have this weird theory that, I think that's an industry that's ripe for disruption by AI, the financial advisor industry, because it's so formulaic that you can just use AI to have such a much more like depth of knowledge. And if you start using models to advise people on how to structure their investments and they eventually replace advisors, well, then the most prominent models will essentially just start trading against one another. And then at what point do they become so efficient at trading against one another that it actually just equals a zero return for everyone? Because they've realized we've advised so many people to buy this, we should advise others to short it or buy this, because we've calculated our data. If we have this much going into these assets and this much going into these, this is how we should advise. But how many millions of people do you have to do that for before it all just ends up giving nobody a return at all? How much wood could a woodchuck chop? Yeah, there's and AI is probably way more intuitive than that, but I see it as almost like too smart for its own good, where nobody wins.
Just pay more for the smarter AI that got you money.
You just got to get Grok 4.
I'm still ChatGPT all the way.
I do a little bit of everything.
Just build trust through education. Literally. I know that's kind of what this whole show boils down to. And I understand that's a task. You've got to go learn. When Brian says agents just need to learn global economics, I'm like, what in the hell are you talking about, bro? Like, that's just learn global. And I understand he's not talking about understand every bit of it, but you have to start.
Certainly don't.
You have to start somewhere, right? And education is going to be the way you separate yourself.
It's easier today than it was in 2020, 2019. With AI, you can have it talk to you like you're an 8-year-old.
I told you guys this before, just as we're wrapping this up. I sent an email. I had a guy who kind of got to a dead end of a conversation with. I went in ChatGPT and said, here's his address, here's his name, here's what his concerns are. Like, I need to understand kind of where to take this conversation next, because I feel like he's beat me. I don't know what else to say. I have a listing appointment with that guy on Saturday.
What if he's using AI to overcome the
Well, then we zeroed each other out, like Brian said.
That is the thing. I have the same theory about corporate email chains, where it just ends up saying the same thing back and forth to itself over and over.
Thing of people being perfectly centered in their email that it just never
creepy,
ends.
But I think it might be the future.
Could that be a Brian's billionaire idea?
I know. I got a better one today. I'm going to start my own financial investment firm. You don't even need to play the intro, Jesse, because this is only for you. I'm going to
All right.
It's been so long.
This is so good.
No, this is only Jesse's going to like this. I'm going to start my own financial advisor firm, and I'm just going to train my financial advisors to sell the heck out of one stock.
Carnival.
We're only buying CCL. And my argument for it is going to get more compelling no matter what.
So good.
Ever since
goes down, we're buying it.
Ever since we all got locked in our houses and told we had to order food through Grubhub, these two have been talking about this damn stock, and I owned it for about 12 months, and I was like, I need this money.
I bought more today. I bought more this morning.
I just wanted to go on a cruise this summer.
My goal is, no matter what happens in my life, no matter how the chips fall, I want to get invited in person to an annual shareholders meeting, because my voice is so important in that company. And I think at my current pace, by the time I'm about 85 years old, I'll get invited.
Well, that's about the time you should take a cruise. So that's perfect.
All right, guys.
Get us out of here.
All right, episode 240 in the books. Go leave us a 5-star review. Spotify, on Apple Podcasts. Go to our YouTube channel, Only RE Pod. And then our Facebook group, the only real estate group worth being a part of. And then, if you want a show like this, just like you heard those actionable items, you need to be creating some video content around it. Go to torstudios.com. Connect with Jesse. And it'll throw some drops in there for free. torstudios.com. We'll see you on the next episode.
Nice, boys. This was fun today. I appreciate y'all. Later. Thanks for tuning into the show today. And if you're watching us on Facebook, make sure to head over to our group and subscribe at the only real estate group worth being a part of. Check us out on Apple Podcasts, Spotify, and anywhere else where you check out really dope real estate podcasts.